So Donald Trump is back in office. The Republicans have the Senate and the House of Representatives. President Trump has been floating the idea of imposing tariffs against imports from foreign countries such as China, Canada, and Mexico. He's even said that he wants to raise so much money with tariffs that we could abolish the IRS and get rid of the income tax.
America is going to be very rich again, and it's going to happen very quickly. It's time for the United States to return to the system that made us richer and more powerful than ever before. Do you know the United States in 1870 to 1913, all tariffs, and that was the richest period in the history of the United States, relatively speaking. In other words, relatively, and that was all made through tariffs. We had no income tax. The income tax came in 1913. As I said in my speech last week, instead of taxing our citizens to enrich foreign nations, we should be tariffing and taxing foreign nations to enrich our citizens. Does that make sense, right?
But is this really possible? Could the IRS and the income tax actually go away? That's the topic of today's video on the other side of the break.
1-877-LEVY-KING, Levy Levy King, 1-877-LEVY-KING, LevyKing.com.
What's up, guys? Corey Hankerson here from Legacy Tax, and they call me the Levy King because I've helped thousands of clients with unfiled returns, back taxes, tax liens, and that's right, IRS levies. If the IRS took your check, the Levy King will get it back. 1-877-LEVY-KING, LevyKing.com. I'm also the author of End the Tax Nightmare, Insider Secrets to Beat the IRS and Reduce Your Tax Debt. Inside the book, I show you how to stop IRS levies, liens, and garnishments without paying the tax in full, how to set up the payment plan that you want and not the one that they want, and how to potentially settle your tax debt for less than you actually owe. My book has been a top seller on Amazon for years, and you can buy it right now for $19.99. But I want to give you a copy of the book absolutely free. Just go over to my website at www.endthetaxnightmare.com, enter your name and email, and we'll send you a copy right away. No charge, not even for shipping, totally free. Before we go any further with the video, please take a moment to subscribe to my channel, and don't forget to smash that like button and follow us on Facebook and Instagram. Okay, guys, let's dive right into today's content. By now, we all know that Donald Trump loves tariffs.
I always say tariffs is the most beautiful word to me in the dictionary, because tariffs are going to make us rich as hell. It's going to bring our country's businesses back that left us.
So what he is proposing is to shift most, if not all, of the country's revenue generation away from the IRS and towards a new system of tariffs on products coming from overseas. Okay, so real quick, income taxes are based on income. The more you make, the more you pay. Whereas tariffs are just another word for tax. But they are taxes imposed on goods that foreign companies want to sell inside the U.S. So if this actually happens, the idea is that Americans would get a serious tax cut or tax elimination, since the IRS would no longer need to collect revenue from U.S. citizens. So how would that actually work? Like in the real world. Let's say an American importer wants to import electric batteries or microchips from China that normally cost $100 each. If Trump imposes a 50% tariff, that American company would have to pay the tariff before the batteries or microchips even leave the port. So those $100 parts are now going to cost $150 thanks to that 50% tariff. Now, Trump insists that the Chinese manufacturer is the one who ultimately pays for the tariff. And that's why we're going to make money for the Treasury, and it won't impact the American consumer.
A tariff is a tax on a foreign country. That's the way it is, whether you like it or not. A lot of people like to say, oh, it's a tax on us. No. It's a tax on a foreign country. It's a tax on a country that's ripping us off and stealing our jobs.
But that's just wrong. The Chinese manufacturer is never going to eat the 50% tariff. And at the same time, the American importer doesn't want to reduce their net profit either. You see, companies make business decisions based on the net profit margin on a particular transaction. So if a company imports an electric battery for $150, they're going to need to make a profit. But they aren't selling it directly to the consumer. They need to sell that particular part to an American manufacturer or retailer. Doubling the manufacturing costs before selling it down the food chain would not be unusual. So the $150 product is then sold to a retailer for $300. Now, of course, that company also has to make a profit on top of its cost, the cost of employees, the cost of labor, and other overhead, etc. So the retailer is going to sell the product to the end user, the consumer, for $600. Before the tariff, the parts would have been imported for $100, sold to a retailer for maybe $200, and then sold to the consumer for maybe $400. But with a 50% tariff, the product is going to be bought in for $150, sold to a retailer for $300, and the consumer is going to end up paying $600 for the same thing that would have previously been $400. So a 50 tariff ends up being a 3 price increase for the American public. Now, before you guys jump in the comments, I will say that this is a very simplified explanation of a pretty complicated process. Some of the cost increases would likely be shared by all parties involved. But make no mistake, prices paid by American consumers would certainly rise. So now that we understand what a tariff is, let's look at why this wouldn't actually work. Nearly all economists agree that the Trump tariffs would be bad for the economy and wouldn't really work as a replacement for the income tax. One of the reasons is that there is simply not enough potential revenue to be gained from tariffs alone. In 2023, the U.S. imported $3.8 trillion worth of goods and services from all countries around the globe. That's according to the U.S. Bureau of Economic Analysis and the U.S. Census Bureau. If we impose just a 10% tariffs on those imports, we would raise about $380 billion. Now, that might sound like a lot of cash until you realize that in the same year, 2023, the U.S. received $2.2 trillion in revenue from individual income taxes alone. So $380 billion would not even come close. To replace the individual income tax, Trump would need to levy a 60 or 70% across-the-board tariff against all products from all countries, not just China, Canada, and Mexico. Did you know that more than 70% of products sold on Amazon are actually made in China, according to the website Statista? And Walmart imposes more than 80% of its merchandise also from China, with only 20% sourced within the United States. That's according to the American Alliance for Manufacturing. The other problem you would have under this system is that it is likely to lead to either inflation or recession. A simple definition for inflation is the rise in the price of goods and services. We've already discussed how tariffs would likely lead to increased pricing. But what about a recession? When the price of imported goods increases, companies could pass those increases along to the consumer. But if consumer purchasing power remains the same, it seems to me that consumers would slow down their spending, and Walmart and Amazon would see lower sales, therefore less revenue. Now, on the other hand, Walmart and Amazon might absorb the tariff cost so that they don't have to pass the increases on to the consumer. Not likely, but hey, maybe. But this would lead to a lower corporate profit on each dollar of revenue. Declining corporate revenues and profits lead to decreased share prices. And it's one thing we know about corporations is that they love that money. So if tariffs won't work, why would Trump keep talking about them over and over again? Well, one of Trump's biggest legislative priorities is tax cuts. Trump spoke at the World Economic Forum in Davos a few days ago, where he said that we're going to have massive tax cuts and make the Tax Cuts and Jobs Act permanent.
To further unleash our economy, our majorities in the House and Senate, which we also took along with the presidency, are going to pass the largest tax cut in American history, including massive tax cuts for workers and family, and big tax cuts for domestic producers and manufacturers. And we're working with the Democrats on getting an extension of the original Trump tax cuts, as you probably know.
The Trump tax cuts provided significant benefits to high earners. In fact, the Washington Center for Equitable Growth says taxpayers in the top 10% received more than 80% of the benefits under the TCGA. In 2017, Trump's own Council of Economic Advisors claimed that the average household would conservatively realize an increase in wage and salary income of about $4,000 from the TCGA's combination of a lower corporate tax rate and an increased level of tax write-offs. Now, why would he still be talking about tax cuts if he actually intends to get rid of the income tax entirely and replace it with tariffs? The idea was that if we gave tax cuts to those at the very top, the benefits would trickle down to ordinary workers. But not so fast, according to the Federal Reserve Board Joint Committee on Taxation. They crunched the numbers and found that the benefits of the TCGA did not trickle down. In fact, the study found that earnings did not change for workers in the bottom 90%, but they did increase for workers in the top 10%. So, in my opinion, I think it really could just be a negotiating tactic. Maybe what he really wants to do is get those huge tax cuts approved, and he's threatening to completely upend the tax system as we know it, only to then come back and settle for massive tax cuts. Just an idea. Another idea is maybe he will threaten China with huge tariffs in order to get other concessions from them, like China banning the sale and shipment of precursor chemicals that are used to make fentanyl. Could it also be that it's just politics? Trump made promises during the campaign, and maybe issuing these executive orders during the first few days in office create the optic that he is making good on those campaign promises. Maybe politically it doesn't really matter if he actually replaces the income tax with tariffs. His M.A.G.A base will find someone else to blame even if the idea fails. So, in summary, I don't really think this is going to happen. I don't think that Trump will actually attempt to replace our income tax with tariffs. I don't think that there's enough potential tariff revenue to offset the lost income taxes. And I also think that even if this could work, it would lead to massive inflation or perhaps a recession. I think that we're actually seeing is a little bit of sleight of hand from someone who sees himself as a master negotiator. But listen, what do you think? Could we actually replace the income tax with tariffs without wrecking the economy? Let me know in the comments. Talk to you later. Bye.